Canada's requirements are broadly aligned with those of the European Union. As well, the SEC has issued similar guidance in 2016. For companies with calendar year ends, the first reporting deadline just passed at the end of May. The Act requires businesses to publicly report on an annual basis certain payments made to all levels of government in Canada and abroad in relation to the development of oil, gas, and minerals. We will specifically examine the definitions of what is considered government and what types of payments need to be disclosed. So who needs to report? An entity that is engaged in the commercial development of oil, gas, or minerals is required to file a report. Commercial development is defined as exploration and extraction, as well as obtaining or holding a permit, a lease or license, or other authorization for those activities. This includes the production of oil, natural gas, and all naturally occurring metals and non-metallic minerals. Commercial development is not intended to extend to support activities for exploration and extraction. For example, activities such as manufacturing equipment or construction of extraction sites would not be included. In addition, commercial development generally does not include post-extraction activities. So refining, smelting, or processing, as well as marketing, distribution, transportation, or export is generally not captured as commercial development for the purposes of the Act. However, certain initial processing activities are often integrated with extraction operations and may comprise commercial development. The Act requires a reporting entity or an entity controlled by the reporting entity to file a report. An entity is defined under the Act as a corporation, a trust, partnership, or other unincorporated organization that is engaged in the commercial activities defined on the previous slide. So if you're a public company listed in Canada, you automatically need to report, or if your company has a place of business in Canada, does business in Canada, or has assets in Canada and meets a size test, the company must also report. If your company is not a publicly listed entity but does business in Canada, the size test applies. So under the size test, 2 of 3 criteria need to be met. The criteria are as follows. The entity has at least 20 million Canadian dollars in assets, has generated at least $40 million in revenues, and or employs an average of at least 250 employees. Again, this is not relevant to perform this test if you're already listed on a Canadian stock exchange. The Act also defines the payee, which includes government at all levels, including national, regional, state or provincial, local, and municipal levels. It also includes crown corporations and other state-owned enterprises that are exercising or performing power, duty, or function of the government. Companies will have to examine the facts and circumstances of payments made to all state-owned enterprises to determine whether there may constitute a reportable payment. So payments made to a third party on behalf of a payee are also deemed to have been made to the payee itself. There are various categories of payments that need to be reported. These include taxes, excluding consumption and personal income taxes, royalties, fees, production entitlements, bonuses, dividends, infrastructure improvement payments. So only these specific types of payments need to be reported. These types of payments are commonly associated with government revenue streams for natural resource development, or in other words, the common types of payments that governments typically levy on businesses that are extracting resources. It is the responsibility of the entity to determine in which categories their payments fall. The entity should look to the substance of the payment rather than the form when it's making this assessment. Payments are reportable if they are made to the same payee and total at least $100,000 in one of the payment categories. So for purposes of determining whether a series of payments constitute payments to the same payee under the Act, reporting entities has grouped together departments, ministries, trusts, boards, commissions, corporations, bodies, or other authorities that perform or are established to perform a power, duty, or function on behalf of a particular level of government, recognizing that there are many forms and manners of organizing governments globally. So, for example, if several fee payments are made to the National Energy Board, Environment Canada, or the Natural Resources Canada, which are all Canadian federal bodies, that add up to $150,000 in a year, a fee payment of $150 would be reportable. And if possible, the report would include and note 3 separate payments made to the various government agencies. Social payments may be reportable as well if they are directly related to the commercial development of oil, gas, and minerals. In-kind payments may need to be reported as well and measured at cost. Fair value may be used to measure in-kind payments if cost is not determinable. So examples of in-kind payments may be share issuances by a reporting entity to a payee that are required by law or are issued as consideration for issuance of a license, permit, or a concession, which is very typical in the resource industry. I will pass this presentation on to Maruf now to go into practical considerations.
Thank you, Patricia. So for the next part of our presentation, we'd like to spend some time on actually some of the practical considerations when we're handling ESTMA, and we'll also spend a little bit of time on how we actually file the ESTMA reports. Because I think there's the conceptual piece, but there's also the practical piece of how to complete the reporting. So certain practical considerations on the payment categories that we wanted to address. Firstly, in terms of tax. So tax is defined under the Act. That means, generally any type of government charge that is enforceable by law, imposed under statutory authority, levied by a public body, and intended for a public purpose. Any government charge like that would meet the requirement of a tax. So in general, taxes include obviously income and profit-based taxes, capital gains taxes, capital taxes, mining and windfall taxes, any resource surcharges, or petroleum revenue taxes. So basically, in a nutshell, anything that's income-based or asset-based would qualify as a tax. So one of the items that to keep in mind is that while a company pays a variety of taxes, it's necessary for the taxes to be in relation to the commercial development of oil, gas, or minerals. So as an example, if tax is levied on, for example, on interest income that the company is earning, that would likely not be reportable under this category. Whereas, tax calculated directly on, oil and gas production would be classified as a production tax and reportable under this category. So it's important to distinguish between the different types of taxes, the different types of income that arise from our different operating activities. Another example that is cited is, with the example of property tax. So property tax on a building that is on the extraction site would qualify under the Act as being reportable. However, property tax on an office building that is, used for administration that is located, for example, in the city away from the mine site may not qualify as being needed to be reported, as it could be argued that it does not relate to the commercial development activities of minerals or petroleum-based assets. So it's important to go into some of these categories to determine whether or not it does relate to the commercial development activities. One item that is definitely exempted from being reported is any consumption taxes. So consumption taxes such as sales taxes, VAT, goods and services tax, HST, and any other value-added tax are generally exempted, so we don't need to you don't need to report those. In the category of fees, the one clarification of items that don't need to be reported is any amounts that are paid in the ordinary, normal course, of business, where a government or a government body is providing a commercial activity to the reporting entity. Those do not need to be reported under the Act. So, for example, any utility amounts being paid to a state-owned electricity company. As that is just a commercial activity, it doesn't need to be reported. Another example to cite is, if you're in a foreign jurisdiction and you've hired certain, police or army protection to protect the mine site, those are also not considered to be reportable as they are providing a commercially viable transaction. Some examples that we, to keep a note of, that any infrastructure improvement payments do need to be reported. So we have an example here where a reporting entity builds a electrical supply grid, and at the end of the lease, it reverts to the government or the municipal government. Those are reported as infrastructure improvement payments. Similarly, in many cases, there are certain social payments that might be made. So the example provided shows where there's an endowment of $3 million to run a scholarship program, as well as $4 million to build a community center. Even though those technically do not relate to the operating commercial activities of the reporting entity, because they are made to facilitate those activities, they are reportable, and they're reportable under the bonus payment category. So a few items to keep in mind from a practical perspective. So moving on to how to actually submit the ESTMA reports, we'll go through basically the 3 steps that are really of relevance. The first is obviously registration and enrollment with NRCan, or Natural Resources Canada. The second is actually how do you complete the report template, and finally, how do you publish the report on the company's website and also on the NRCan website. Always keep in mind the deadline is 150 days after the completion of each financial year. So step 1 is registration with NRCan. There's a specific contact form that needs to be completed. We've put in the link to the email that you need to email the contact form to. And why this is important is that it actually generates a specific ESTMA ID that is going to be used for all future ESTMA filings, and that's used to track all reporting. So that's a key ID that needs to be obtained prior to any submissions. Keep in mind, it takes a couple of days or a week to get a turnaround on this, so you don't probably want to do this on the day before filing, because you will need it. So moving on to how do we actually report. So there are 2 reporting templates that are provided by NRCan. These are available on their website. They are in Excel and PDF. Either can be used. I believe there is also an option to use your own reporting template. However, it is encouraged, and I think most people do use the provided templates that are given to users and reporting entities by NRCan. We should also keep in mind that all payments are disclosed on a cash accounting basis. So these are as the payments are made, not as the payments are accrued. So there may be a disconnect with your financial statements, because your financial statements are based on an accrual basis, where we do record certain things on an accrual or payable basis, even if their physical cash has not been paid yet. So keep in mind that this is on a cash accounting basis. Also, all payments, when they're reported, should be rounded to the nearest $10,000. Please keep in mind that the rounding is for reporting only. It's not used to determine whether or not you've met the $10,000 threshold in terms of reporting. The one other item that we have to note is that all payments must be broken down to a project level. So if you have multiple projects in a singular country, it needs to be by project, and also it needs to be by payee. So that's the government body that you're dealing with. In terms of the currency of reporting, all reporting is required to be in Canadian dollars or the financial statement currency of the reporting entity. So if you presented your financial statements in a currency other than Canadian dollars, you would be permitted to continue to report your ESTMA filings under that currency. There are a number of methodologies that are acceptable if you do need to convert any of your currencies. One is using the actual exchange rate at the time the payment is made. You can also use a weighted average of the exchange rates during the period. And finally, you can use the exchange rate at year end. So you have three options available to you. You do need to disclose which option you have taken and the exchange rates used in order to make those conversions. One item to note is that there are two options in terms of attestation. The attestation can be done by a director or officer of the reporting entity, which is typically the case. However, certain entities may choose at their option, it's on a voluntary basis, to have the attestation done by their independent auditor. And if it is done by the independent auditor, there will be an audit report that will be submitted as part of the filings. Many reporting entities may have subsidiaries as well that also either act as the main reporting entity, or for larger entities, there could be multiple reporting entities within one consolidated group. The Act does provide that a subsidiary may report their payments through the parent reporting entity, so you'd only be submitting one report for all entities within a consolidated group. Within the Act, there's also a concept of substitution. What this entails is there are a number of other jurisdictions that, as part of our application of ESTMA, similar acts have been passed in a variety of different jurisdictions, certainly the EU and the US being two of those, notably. To avoid the sort of a double onerous requirement, there is a possibility that if you've already filed in a certain jurisdiction, that you may be able to use those reports as a substitute to your Canadian ESTMA report. So for those entities that are reporting in different jurisdictions, you may contact NRCan and be eligible for using that foreign report in lieu of your Canadian report. The final step is publishing. So as we indicated, the deadline to publish the report is 150 days after year end. The reports must be publicly available for at least 5 years. A link to the ESTMA reports on your corporate website, if that's where it's been published, as well as an electronic copy of the report, must be sent to NRCan by email. If there are no reportable payments, there is no requirement to file any reports. However, they do encourage that an email be sent to NRCan to indicate that there have been no reportable payments. Now, one thing we'd like to show you briefly is certain examples of ESTMA reports that have been filed. Just give us 1 second. We're just going to pull up some examples on screen. So this link basically indicates all of the reports that have been filed to date by the variety of extractive companies. So if we just use one example to highlight what the report looks like. So this is a report for Agnico Eagle Mines Limited, for the period of fiscal year 2016. We talked about the different attestation requirements. So in this case, the attestation has been done by the entity itself, by an officer or director, not through an audit. And so that box has been clicked off. And then if we move down to the actual filing, most of the, if you go through most of the example links, they're all very similar in the way they are laid out, and they all use pretty much the same template. So if you go through this example here, you notice that the first table is by payee, and each of the categories have been completed by payee. So in this case, you have Government of Canada, Province of Quebec, various other municipalities, and so each broken down by category. If you note at the bottom, they indicate the exchange rates that are utilized, as we indicated. If you scroll to the next page, this is basically the same payments that are reported in the first page, except they're now broken down by project. So the key here is to remember that you have the payments by payee. You also have the same payments also broken down by the different projects that the reporting entity is working on. With that, that brings an end to our ESTMA practical consideration session. I'll turn it over to Mike to discuss the Aboriginal sector.
Thanks a lot, Maruf. And I will be touching on payments made to Aboriginal or Indigenous groups in Canada who are involved in the resource extraction industry. Starting off there, as of June 1st this year, there's going to be a requirement to include payments made to Aboriginal or Indigenous groups within Canada, and that may be First Nations, Métis, or Inuit communities, or separate economic development corporations owned by these groups, or even certain non-for-profit organizations owned by Indigenous groups within Canada. Starting June 1st, any payments made after June 1st, 2017 are going to be required to be reported in the same way that any other payments to payees will be recorded that have been covered already. And payments made prior to June 1st will not have to be reported on the 2018 report. Typically, First Nations will, it may be direct payments to the First Nation community or Inuit or Métis community itself, or, like I said before, an economic development corporation, a not-for-profit group, or even possibly an individual band member or status First Nations member within Canada. Like I said, from June 1st, 2017, reporting entities must include payments made to these Indigenous groups in Canada on their reports, and any payments made prior to June 1st will not be required to be reported. We're covering an example of potential payment to an Indigenous community within Canada. So for an example, if a signing bonus or royalty payment of $500,000 is paid prior to June 1st, 2017 by the reporting entity to an Aboriginal Band Council or an Economic Development Corporation owned by the band, this payment received by the Economic Development Corporation, even though it is a separate corporate entity, will not have to be reported prior to June 1st. But that being said, if the same payment is made after June 1st, that $500,000 will have to be reported by the reporting entity. One of the alternative strategies that's commonplace in the industry with First Nations or Métis or Inuit groups to avoid this reporting within ESTMA is to set up a joint venture opportunity that is mutually owned, whether it's an LPGP structure or an equity ownership structure that is owned by the First Nations group or organization or Economic Development Corporation and co-owned by the reporting entity. And by flowing revenues through here, which are not subject to the payment categories that were discussed prior, the reporting entity will not be required to report any sort of payments as the revenue flowing to this joint venture or partnership will not be part of the payment categories. And so that wraps up the First Nations First Nations Métis and Inuit component of the presentation, and I will turn it over to Leanne.
Thank you, Murph, Patricia, and Mike for taking the time to give us the details on the latest ESTMA updates. I'm confident that the information that has been provided will help our listeners keep a step ahead of the changes and ensure that they meet compliance requirements and regulator expectations. There have been questions coming in from our audience throughout the course of this webinar. To be conscious of everyone's time, we will be sending out the questions with the answers to all registrants along with the content and presentation that was discussed today. We're going to take this opportunity to answer some of the top questions, so I'll pass it off to Barrington to kick us off. Let us begin.
Thank you, Lena. What are the penalties for non-compliance with the Act?
So offenses under the Act for any non-compliance, and that includes non-reporting, is $250,000 for each state. So obviously that's the maximum fine. We haven't seen any entities being fined yet, but that it's up to $250,000 a day. Also, we should keep in mind that at a director level, for non-compliance, directors could be held personally liable as well.
Another question. We do not have a website where we can publish our ESTMA report. How do we go about publishing this online without a website?
So thanks for that question. The company is responsible to file its report and publish it on an internet website that is publicly accessible for not less than 5 years. So it does not necessarily have to be on a corporate website, but it does have to be available, publicly accessible for that period.
This is particularly applicable to the CSE. We are a company set up as a mining entity, but we operate in the cannabis space. We aren't doing any mining at the moment, so do we still need to complete these filings?
So as we discussed earlier, if there are no commercial activities that are being performed, there are no reportable payments that need to be made. It's the activities of the company that follow the reporting. So as a result, if there is a company that is registered as a mining company, it should probably get an ESTMA ID, but it doesn't need to actually file any reports because there are no reportable payments. It's encouraged again for them to send an email to NRCan to indicate that they have no reportable payments.
Thank you again to our speakers for presenting, and to all of you who took the time to join us this afternoon. On behalf of MNP and the Canadian Securities Exchange, thank you once again for joining us today, and we look forward to hearing from you. This is the end of the webinar. Have a great day.